Hello everybody, happy Tuesday edition of the TraderMerlin show. Hope you had a great trading day out there. Let me just do this. For some reason my camera loves to just reset. Boom, now we reset the camera itself. Yeah, it was an interesting day for me. I actually purchased some nice crypto, added to my crypto portfolio today. Maybe we can talk a little bit about that. Certainly those of you who are in the Crypto Investor Live program, I'll be talking about some new additions. I actually added one brand new one, of them just playing around with the futures market on another one, but nice additions there. Today's topic will actually be more about listener questions, which of course what I try to do on a regular basis is get into deeper dives into some listener questions on topics which you may have. So for those of you who might be new, hit that subscribe button. For those of you who aren't new, you can always contact me at TraderMerlin@gmail.com to let me know what topics you want to talk about. David, hello from Ottawa. I'm sure I'll see you later on this evening for our session. Good evening, Eric and Les, Kenny, John. Jimmy T, that's right, go Giants. Boy, that was a nail-biter of a game last night, but I hate to say it, but I almost want the Giants to lose tonight so we get Game 5 in San Francisco, which will be just absolute mayhem. But yeah, it was a fun game last night, and go Giants either way. Jim Bass, Jerry Walter, we got Tom as well. Good to see you, Tom, Terry, and Johan Vervoort, Brian Kamas, Shadow One, Gary as well. Good to see everybody. Yes, Knowledge Merlin style, huh? It was so funny. I went to the office today and I was cruising through, and there was a core strategy class being taught. And I don't like being a celebrity, but it was so funny. I went in there and I'm in the kitchen grabbing a donut, and all of a sudden some students were there like, "Can we take pictures?" I'm like, "Oh, I'm all embarrassed." Oh boy. Anyway, yes, we will try to do as much as we can to do more education today. So let's dive into the topic just so I can make sure I get through this topic, because it's kind of a lengthy one. And I've touched on this in pieces in the past, which has been, how do we scan through or filter something to find the relative strength within a sector? Now, today's show is really, ultimately, it's going to be about what you feel about these markets. Some people feeling our holiday season of retail sales numbers are going to be great. Others thinking we might see some really ugly financial numbers from the market. Why? Shipping delays, you've got all kinds of inventory issues now starting to rear their heads with regards to supply coming from China. Not only just are the costs much more expensive, but even if you can get them, the costs are going to be even higher. So that will be part of today's discussion. And again, you need to make your own analysis of what it is that you either want to buy if you're optimistic, or potentially what to short if you're pessimistic. So here is what we've got is the graphic for today. I guess I could have not cut off the word opportunity, but it's just scanning retailers for opportunity. Now, of course, one of my talk tracks over the past couple weeks has definitely been, retailers. I think that retailers are going to get kicked in the teeth a little bit come the holiday time. Why? Because it's such a boon for almost every retailer out there right around the holiday time. We have these Black Friday sales for Thanksgiving, and a lot of times it's a couple weeks before that now. And they have these amazing deals. Like if you want to buy a new TV, Black Friday is one of the best times of the year to buy a TV. However, given the fact that Best Buy or Target or Walmart or even Amazon may not be able to get the inventory to offer those crazy deals, the question now is, are we going to see, number one, the inventory show up at companies like Best Buy? Let's use Best Buy as our example here and just say electronics. Are they going to get the TVs that we need? If they aren't going to get the TVs that we need, there's no way they're going to start, slashing prices on inventory that they don't have. They're selling the future. That's a bad idea from a retail perspective. If they do get the inventory, which, that's assumed that things pick up, that the backlog in inventory we can get back online by the time we get to mid-November, then, okay, maybe they offer some specials. Then you have the pendulum swinging even further, which says, what happens if all of a sudden supply chain picks back up and we catch up, and all these companies, which from what I'm hearing have been ordering extra inventory just trying to get something here, what if all that backlog of inventory shows up and now they've got a huge surplus? Now they might be slashing even more. So I guess it really depends on which side of that three options you fit on. Are you on the side that says, hey, we're not getting any inventory, there's going to be no sales? That means short retail stocks, right? Because they're just going to get absolutely hammered this holiday. The middle of that piece would say, well, they'll catch up and we'll have a typical normal holiday season, and then, maybe things start to drift up a little bit. I think it'd be a slight down if that's the scenario. And then the third alternative would be that we have this huge influx of supply coming in, everything gets caught up, and all of a sudden retailers, they'll have great sales numbers, but they'll have cut their prices to get rid of a lot of inventory, which means good for you and me. Of those three, I don't know. What do you guys think? What's your expectation? Number one, we have a rough holiday season because inventory just doesn't get here. Number two would be that inventory does get here in time. We have a normal holiday season. Or number three, inventory comes in plus all the extra and have a huge surplus of inventory for the holiday season. Which one do you guys think? 1, 2, or 3? I put myself in the 1 category, maybe 1.25. I do think that you're going to start to see inventory the shipping issue start to resolve itself. But I think that that's going to, from what I'm reading and all the data, I think it's going to take a couple of years to get fully sorted out with regards to the shipping thing. I think, as Jerry puts in there, number 3, I think at some point we are going to have a huge glut of inventory. We're going to have a lot of extra inventory on hand. So, to me, it means basically if you are thinking about buying something expensive, TVs, electronics, refrigerators, boy, probably next year is when you're going to get some really good deals once all that extra inventory catches up. And this is why trading works, folks. I mean, I've got Jerry and Mike both say number 3. And mind you, that means the by Thanksgiving. So really within a month and a half here, we should have all the shipping fixed and all that inventory showing up. I'm still seeing boats out by Long Beach in a big way. I'm seeing, I got 4 1s and I got 2 3s and a 2.5. So it seems to me like if we add all those up and divide by, it's probably going to be what, like 1.8, 1.7. So, all right, most of us still thinking there's going to be a little bit of a supply chain issue. Cool. And again, I don't know what it's going to be. I don't want to, it's just my opinion. I'm glad we do this. That's why everybody has their own opinion. I think they'll jack you on pricing, whatever they have, surplus in 2020. Yeah. Well, the tough part is if Best Buy is doing what I would do if I was their main distributor, which is I'd be ordering a lot of extra stuff and I'd be trying it from different distribution channels trying to get something here. If I'm stuck with a massive inventory, I have to find places to put it, and that costs me money. So I would probably be slashing prices to get rid of a lot of that. So let's see. Tom says, lack of inventory helps dead inventory move. Yep. Products with lower demand due to popularity, price, quality, or other attributes will move when there is nothing else available. Right. It's like that thing, when you look at the... what are they called? The post-apocalyptic grocery store, right? I'm going to walk down the aisle and go, oh, great, canned beets. I'm not going to eat freaking canned beets. But then you go, well, shoot, that's all there is? I'm eating canned beets. Yeah, I'll buy some crappy TV that I just don't want for the holiday. The good news is we are all in a position, I'm going to go on a limb and say we are all in a position where we can wait, right? Unfortunately, there is this wonderful expectation that retailers and businesses have established around the world that we have to have everything for Christmas, right? Load up that tree. Thank you, Chevy Chase and Family Vacation. Load up your Christmas tree and your family with presents. You know what? Maybe if you hold out a couple months, you get 3-4 times as much. Anyway, let's not go into my bah humbug Christmas. Let's go into scanning retailers for opportunities. Now, this is really about, formulating an assessment about what you think that shipping situation might look like. And to me, that's a really... an open-ended one. And again, you can see the results from just our group here, very different responses. Now, this all stemmed from a question that came in from Jeff, who I believe is here today. Yeah, no tuna makes sardines look yummy. Oh, God, my mom used to eat canned sardines. Thanks for bringing that one up. Ugh, canned sardines, so nasty. Margaret says, so will the Black Friday sales be real? I don't know. I mean, I have not seen anything yet. I have seen nothing yet that says sales about Black Friday. And, of course, they're not going to show up for another couple weeks. But, I hate to say it, I'm not a huge retail shopper, but I love scanning those ads to find amazing deals. We actually did a really cool special for, I think it might have been OT Academy. I'll see if I can revive it. But it was really like how to get the best bang for your buck for the holidays. And that was such an awesome video, or webinar, I think is what it was, where I was going through all these different tools and apps on your phone that you can get now. Like if you want to buy a TV, you can type in which model and size, and it will scan hundreds of markets and find the best price for you. So you really just never even have to do all the work. You just click an app and it does it for you. Anyway, let's go read through this question because I want to see what set the stage for this discussion. Jeff says, by now retailers are getting any merch they can and marking it up. By the time they actually get the merch sitting in the bay now, it's going to be later on into the Christmas season or after. Still not sure how to trade this, but if you're going to buy a 55-inch TV, I'm thinking the later you wait, the cheaper it may be. I agree with you 100%. I think that we'll probably see something Q1, maybe Q2, but it all really depends on when this whole thing cleans up. And remember, it's not just the delays in shipping, it's the shipping costs. You guys might remember I showed you a chart of what it costs to ship a container from China. It was like $1,400. Now it's $12,000. That's all going to be passed on to you and me. Hey, Chris, good to see you. High five, go Giants. So, even people like Chris, who owns a mechanic shop, right? There's certain things he's going to be getting. Of course, he's muscle cars, so my guess is most of it's American parts. But there's certainly some inventory pieces he won't be able to get for a while. And again, that slows down his process of being able to fix those repairs. So, it's going to be pretty, I won't say all-encompassing. It's going to be pretty big. Let's see. Let me go. So then Jeff actually adds on to this one, because I do agree. I think you should wait if you can. He says, can you show where and how to check on the sectors overlay and how you would drill down into each to see the how individual stocks are performing? Yes, I will definitely do that. So let me start with a couple different things here. Number one, what I love to do is pull up a list. So if you guys are ever wondering, and this is a really good exercise to do and just practice with, if you're ever wondering, like how, I don't know, industrials or utilities or healthcare or finance, bank stocks are doing, you just go to the S&P and pull up their indexes. So that usually they have an ETF that represents something. So the one we'll look at for retailers is XRT. So let me go over here. I'll bring up XRT. XRT. So that's the S&P retail ETF. And you can see the picture it's painting is not good. It's really just been sideways almost all of 2021, and now notice what it's doing right now. It's starting to make lower lows. It's been making about the same or slightly lower highs. So to me, we're almost at this inflection point where if we get below, let's call it 87.75, then all of a sudden it feels like it's broken out of this sideways action. Oh, shall I bring on the yellow box to say it ain't so? Let's just do that. All right, I'll put that yellow box right about in there. And again, we did see a drop below it back in March of 2021, but you can see that entire index is really just been channeling sideways. Not a very strong indication whatsoever. It's hesitation after a monstrous rally up. And I agree with Jerry right there. He says transitioning downtrend. It could be, right? We don't know for sure yet, right? But we can start to line all the ducks up, if you will, and it does paint the picture that retailers are probably starting to do rather poorly. I also saw an interesting post yesterday or today talking about how Tim Cook, the CEO of Apple, just unloaded like millions of dollars worth of Apple stock just last month. Why? He knows supply chain. He knows what's coming, right? So a lot of times we can look at insiders, and I'll show you a way to do that as well here as we progress. So a lot of stuff to go through. So first thing we want to do is figure out which ETF represents the sector we want to analyze. And here we go. I wish I was Picasso. XRT is the ticker symbol. From there, you want to go find out what the components are. And you could go to Google and type in XRT components, and you'll find a whole bunch of different lists. I personally, and I'm not sponsored by anybody, guys, but Bar Chart has a really cool feature where you just go and you type in XRT up here, and then when it brings it up, you can click on constituents on the left-hand side, and it'll show you all of the holders of that, right? So these are all the companies, things like you see eBay, Nordstrom's, Ulta Beauty, Bed Bath & Beyond, Etsy, Lithium Motors, strange but okay. Costco, DoorDash. So you got a lot of companies here, and some probably don't need to be there, like DoorDash. I'm probably gonna remove DoorDash from my list of watch anyway because I don't think that's gonna be impacted by shipping delays out of China. There's some that are probably gonna have bigger impact, like Big Lots. Nordstrom's. A lot of clothing is made overseas. So Big Lots. What else we got? Maybe eBay. AutoZones, you're talking auto parts, Macy's, another clothing company. So what I do is I download this list. Right up here at the top, you can download the list. And I put them into a spreadsheet. So I have a spreadsheet you guys can see here. I've got like financials, industrials, utilities, retailers, energy. And I just make a watch list of all the different components. And that way I can do what I want with these. I can import them, export them. Right now there's about 107 different companies in the XRT ETF. Right, so what I would do is I'd bring them into TradeStation, and I don't mean to plug TradeStation, it's just their scan and filter is really easy for me. And here what I've done is I've put all of XRT in this scanner, and I simply said get rid of anything that's trading less than, there we go, anything that's trading less than 1.5 million shares average per day, and get rid of it. So I've gone from 107 and I'm down to 41, right? So not all of these are going to be great candidates. But what I want to do is I want to kind of do a simple comparison like this. So on the top, I put XRT. And again, the only reason I'm doing that is I want to see which one looks weaker compared to the overall index that I'm looking at. So I've got 41 different components here, and I'm not doing any specific scan or filter for these. I'm literally just going by the most liquid. So these are sorted by the most liquid at the top. So Wish, as you can see down here at the bottom now, is the most liquid out of the XRT components. Now, what I do personally is I make sure that these charts are lined up the same time frame, because you can see here the top chart goes all the way back to 2020, and the bottom chart is really just 2021. So let's zoom out so we have the same apples to apples look. And you guys can see the bottom, right? The time hash marks line up. That's what's important. So clearly Wish is wishing it could go up. I mean, this thing just looks like it's dead in the water. No wonder it's got great volume. It's just like dying. I'm going to keep going down here. Macy's was my number 2. So Macy's is looking stronger than our retail index. So to go back to Jeff's question, what would I look for? At this point, I'm looking for things that are slightly weaker. The problem with that analysis is it assumes, at least my assumption would be that if it's already showing weakness compared to XRT, then the smart money is already pushing it down, meaning the smart money is already shorting that or getting out of their long positions in that retail stock. So we might be a little late here, but I still think there's plenty of meat on that bone. So here is Macy's. I wouldn't touch that one. Kroger, again, this is groceries, so I'm not going to mess with Kroger. GPS, Gap. All right, so Gap looks like a good shorting opportunity. Right? You've got a downtrend going. It's way weaker than the overall retail sector. You know they're getting a bunch of clothing from China. So, this is one that I'm sure for the past few months has already been focusing this focusing on this and beating them down, shorting those or getting out of long positions. Now, we all know Walmart, which will probably fare rather well in this whole thing because they're Walmart, but still a vast majority of their inventory is coming from China. Now, I'm going to zoom out just a hair here on both of these. I'm going to go 2 ticks on both because I want to see a little more detail from where Walmart's been. And you can see here Walmart really has been, I'll say, struggling. It hasn't had any real sense of clear direction. We did bounce just recently off this 136 level here. So, if anything, I'm actually probably looking to short a rally here on Walmart. Why? Well, simply because Walmart gets so much inventory from China, they're going to be hurting, and that supply zone for me is somewhere right around where that yellow box is. So if we can get back up to that spot, which would be the next supply zone, you guys can see that in the last 4 days, it's done nothing but hitting that supply zone. It's hit it 4 days in a row and come down. This actually looks pretty weak for Walmart right now. So you could short if it comes to the rally, or you short a breakdown below, let's call it 134.30, right? Yeah, Walmart not looking so good here. TJ Maxx, even weaker, right? So it looked better than the XRT index up until mid-August. You guys can see right here, it was making a higher high, and then all of a sudden lower high, an aggressive sell-off, and it's now starting to break some lows. So there's a gap on TJ Maxx or TJX companies, which goes all the way back to about $54, which that could fill rather quickly if this thing does start to hit any long-term, breaking through demand. Patrick says, Walmart fundamentals look good though. Yes, they do. Of course. I'm not saying Walmart's a crappy business. I'm not saying Walmart is probably one of the biggest, best companies in the world. But if they can't get inventory, right? If they can't stock their shelves with all the garbage they sell, then those people who are literally waiting out in line at midnight on Black Friday to kick down the doors and beat people up to get a toaster for $3 less than retail, what's the draw? Where's their money going to be made? I think all these people, and it's funny because I have a couple friends who they love Black Friday shopping. That's their thing. They'll go out, a good friend of mine, her and her daughter, they go out every year. It's a family tradition. Like, might be a little slim pickings this year if we don't get inventory. So while I agree with you, Patrick, the numbers look great for Walmart. The fundamentals are there. Shorting Walmart's a dangerous bet. However, they do not have access to all the inventory they used to. and that may continue. Not only that, but again, those shipping costs have raised significantly. Why is there a lack of inventory? Yes. So why is there a lack of inventory? The lack of inventory is because we have shipping delays. We cannot get inventory on our shelves. And again, it's funny, I may have shown pictures on the show where I've gone to Dog Beach before the oil spill, and I will take pictures of all the shipping containers lined up. So you got a couple things. Number one is they don't have the manpower, if you will, to work the shipping docks in China because of COVID. At least that's the excuse that we're hearing. I don't live in China, so I wouldn't know. But that's what the media is telling us. Number two, because demand is increasing right now because now expectations are we're coming out of COVID, there'll be more sales. We can't get dock workers down here to unload those ships. And some would say it's because they don't want to work, or they're too afraid of COVID, or just in fact people are getting COVID and they're shutting down certain areas of the ports here in California. Either way, ports are being impacted. That has caused for huge increases in the price of shipping. As I've shown in the past, it went from like $1,400 all the way up into like $12,000 is where it's at to ship one container. So if Walmart's got a whole boat coming of merchandise, they're paying 10x more than 10 times as much to ship their products and services. So they're going to have to pass those savings on to us. Those costs on us, excuse me. Black Friday is a scam in my opinion. It is a scam. It's a marketing ploy, right? We are a consumption-based economy, and they make us think we have to go buy all this stuff. But what I do, I get picked on a lot for my shopping habits. But I'll tell you, I will wait for the deal to come to me. It's kind of like trading, guys. For me, Black Friday or just shopping in general is like, I know what I want. Here's what I'm going to pay, and when that comes to me, I'll buy it. I told you I was going to buy an 85-inch TV for the holidays, and I said it has to be $1,200 or less. It got to like $1,305. I'm like, I can't. I got to wait for it to be in the 1200s. And instead, I bought a 75-inch for $600, which today costs more than when I bought it last year. So it's about being patient. Let those trades come to you. Let's see. We're going to have a few comments here. Or losing jobs because they're not vaccinated. That could be as well, right? They're told they can't come to work. You saw what Southwest Airlines did over the weekend. 2,000 flights canceled because staff are going, we don't want to get vaccinated. We're not going to come to work. Whoa! Talk about people standing up, right? And it doesn't matter which side you're on. You guys might be the super got to be vaccinated. This is the apocalyptic virus, or you might be on the other side that says this is just a bad cold. Whatever it is, people are taking a stand, and that's impacting Southwest. That could also be impacting the ports as well. Margaret, I agree. Buy made in the USA only. Unfortunately, we try to as often as we can, but usually the components for many of the stuff made in America is going to be made in China anyway. For example, you're not going to be buying American-made TVs or American-made washer dryers that are all American-made components. Generally, they're going to have a large part of those components are coming from Asia anyway. I think it is a scam. It's brainwashing America to go out there and spend money. Bottom line is you should only be buying stuff that you really need. And if you get an amazing deal, sure, buy it. We got anti-vaxxer there. No worries, Patrick. Hey, I don't hold anybody's opinion. Whatever you guys want to believe, that's fine. The key is to not hate somebody because they have a different viewpoint than you. So, let's see. Black Friday is trading non-farm payrolls in the forex market. Yeah. All right, let's go to, I'm going to keep going on with this scanning because I had a whole bunch of other stuff. So we could run through here and go look at a bunch of different stuff. So we saw Macy's earlier. Here's the Macy's chart, which actually looks pretty strong. Here's Nordstrom's. So you're talking high-end retailer. This one already is looking weaker than XRT, right? So again, I'm just looking for relative strength to show weakness. What else? American Eagle Outfitters. Yeah, not so American, is it? It's international products, but slowly drifting down, making new lows. So there are some nice retailers here. Dollar Tree, I wouldn't think Dollar Tree is going to take too big of a hit. They just selling scraps anyway. Michael says, let's make a deal. When you get an 80-incher for $1,200, I'll buy your 70. Hey, you know what? I'm totally happy. Mine's, I think it's 75 or 78. It was funny because it's a brand I don't normally use. I normally am a Samsung guy, but this was, what is it? What's else? Not LCD. Oh, it's a three-letter word. I can't even think of it. But yeah, I paid like $600 for a 75-inch TV, and I looked at it recently. It's $900. I'm like, I won. All right, what else could be a really good one? So we look at things like Amazon, right? I don't think Amazon's going to take a big hit, although Amazon's chart doesn't look very good, right? Just choppy and sideways. Target also could be that same situation as Walmart. And notice how they've been selling off for about 2 months. And you guys might remember we looked at charts recently of a lot of these retailers, and we mentioned that a lot of them are going to potentially have this shipping issue, and I believe it's being priced in as we speak. Now, I don't know, where do you find a good spot for Target where you say, I'm good to own this for the long haul? Is that down at the, I don't know, the 170 mark? Is it down here around this 200 mark? That's a decision you got to make on your own as far as how far down do you think this is going to impact Target and how bad will it get. I think we'll come out of this relatively quickly, but again, things like Bed Bath & Beyond, I mean, this chart looks terrible anyway. If you held this one for a year, you've made nothing. It's just gone sideways for over a year. Let's see. Etsy, now that will probably, Etsy will probably do well. Etsy, because it's, craft-based stuff, this will probably do rather well, and it looks like it's trending stronger than XRT. You went long on Amazon, huh? I mean, you would think that Amazon would probably do okay in this, but again, a lot of those products coming from China. I agree with Margaret. If you can find an American-based retailer, and maybe this is a project for me. I don't have a lot of time, but maybe one of you guys can do it. Dig down and say, who is selling purely American products, from the ground up with no dependency from international stuff. Who is building a purely American product? Boy, I'll bet you they'll probably do pretty well because they might not be impacted as much by these different supply issues. Now, they're probably still needing steel and plastic and other resources, but I think it'd be really hard to find a purely American manufacturer. If you could, they'll probably fare rather well if the shipping thing continues to drag on. All right, so that's one of them, and this is just the easiest way. I love doing this, by the way. I love just scrolling through and just. I'm not even gonna look at the ticker symbols. I just like to tap. Okay, so whatever this is, SFM. This is VRM. Vroom. Clearly something is broken with Vroom anyway. It's been selling off pretty much this entire chart. What else do we have? There's another one. What is this? Oh, Sprouts Farmers Market. It looks bad, but I wouldn't think that this is going to be impacted by a lot of those shipping tariff costs. Let's see. What else we got? Leslie's. Yeah, that looks bad. Urban Outfitters. There's another one. Abercrombie & Fitch. Holding. Ross Stores, usually where you buy all the discounted, and Costco was one that people are asking about. Here is Costco. Costco is still holding, but you can see it. It's the first time it's really had some hesitation, right? It's really starting to stall a little bit right now. But Costco, how much of that is really sales is really driven by China? I'm sure a bit of it, but a lot of it's retail products that we need that are made in America, cereals and things like that. So I don't think they'll be as impacted. Certainly their electronics department will probably be impacted, but we'll have to wait and see how it goes. Santosha's went to 2 different Macy's locations last week and see that they did not have apparel stock like they used to have. Yeah, and I think it's probably going to get a little bit worse. And I'll tell you, I'll let you know when it happens. I'm not planning on buying anything for the holiday season. I have pretty much everything I need anyway. But when I start to see those big sales coming, I'll probably load up on some stuff. I'll let you know. Can you please look at Dick's? Let me just say the whole word because it just sounded weird when I say, can you look at Dick's? Can you look at Dick's Sporting Goods? How about that? I just took profits on a put position, but might take another go at it and move up into supply. All right, let's look at DKS. All right, so from a technical perspective, beautiful move. Huge gap up. I'm assuming that was on earnings about a month ago. The question now here for you, Mario, is where do you buy back in? So you said you took profits on a put position, but might take another go at it on a move up into supply. Yeah, I think if it moves up into supply, but be really careful because if you look at this trend here, it's been nothing but up. So this sell-off may just come right back down to this trend line. We could probably throw on moving averages if we really wanted to. Let me go into a different platform just because TradeStation, I'm trying to avoid them. You want a DKS. All right, so here's your Dick's Sporting Goods, and I'll throw on, let's say, a 50-period moving average. Yeah, you just broke the 50. Not the end of the world. Let's see if we can modify this a little bit and go longer term. And I know some of you are going to go, wait a minute, why are you switching these things out? I told you I have had friends over the years that they do a really cool thing where they modify this. So they'll go to where they see it touching the most. Yeah, this is not really going to work that well. But a lot of times you can adjust your moving average, and where it seems to bounce the most points of contact, that's where they will adjust it to. To me, it looks like we're actually down below it. And again, that's even if it's an odd number, like, oh, an 80 period moving average. No one's going to use an 80. Well, if we notice, I'm trying to pull it up so it hits a lot of these points. Either way, I think the most recent sell-off would have broken a longer-term moving average, but let's see if I can go to 70. So we got 1 point, 2 points. Yeah, it's going to be hard for me to get this one to touch a bunch, but yeah, you'd be surprised sometimes how it will just line up perfectly. So if you are thinking of shorting dicks, yes, I think it up into supply would probably be the most logical thing. You're looking right around 120, which it's pretty darn close to right now. It's at 114.62 in the after-hour session. But yes, I think if you're shorting it, which would be the logical thing, just be careful because it's still on a big overall trend overall. Michael, 1.5? 1.5? Oh, yeah. Oh, the Dollar Tree, the 99-cent store. Inflation. It's actually funny you guys say that because I forget it was on the news or read it or heard it. I don't know. I'm taking too much information. They were talking about how the 99-cent store is going to have to change because a lot of the items they have are no longer 99. Inflation has pushed them up, so they're over $1 now. Pretty funny. All right, let's see. And so here's where I would encourage you guys to do a little bit more homework as well. So if we run through that watch list, and again, you can download these from Bar Chart. I've sent this this spreadsheet I have to some of you, which has a few of the different market segments, including materials, industrials, etc. I just kind of keep this on my desktop, so it's just an easy reference for me. But you can build your own. It's real simple. Once you get that, there's a couple of different things you can do. One that I really like, if you don't have TradeStation, is stockcharts.com. All right, so you go to stockcharts.com, and there's a thing called a perf chart, and I love perf charts. They're so much fun. So you go up here. This is a sharp chart. I'm going to go to perf chart. Hello, where is my? There it is. Perf. I can't read. And now we can start to type in some of those symbols that were on this list, right? And ones that you might be interested in as far as how they're performing against each other. So what I'm going to put in here is just go XRT. And then from now, I'll add in a whole bunch of different ones that I think that I might be interested in that are in that same sector. So if you have a couple that you want me to add to this list, feel free to just chime them out. I'll put in like 5 or 6 big ones. Since I know Big Eb was an Amazon, we'll look at AMZN. I'm going to add in Walmart. I'll add in TGT. I'll add in, how about Macy's, right? I'll throw on Macy's in there. And then what else do you guys want? If anything that you want me to check out and add in, I'm just going to add them on in. The one that I wanted to add in, I think would be good to be Nordstrom's with JWN. What else? And I'm going to throw Costco in here just for example. Okay? And if you guys have others, I will add them in. But we've got 1, 2, 3, 4, 5, 6, 7, 7 or 8 in here. The more you get, the harder it'll be to look at. But only reason I like to do this is a relative strength comparison. So the first one is going to be our XRT, which is this reddish color. And you can see that going back to January 1st of this year, the S&P is up, XRT is up almost 38%. But everything else we looked at, relative, is losing. Oh, so you want to throw Kroger's on there? I'll add on Kroger for you guys. I see you guys want KR. I see Kroger, and then Phil C wants, all right, we'll do Home Depot and Dollar Tree. That's it. I can't do any more. I mean, I could, but it just gets really crowded. Plus, I'm colorblind. So, we still have the same result, right? You guys can see, let me real quick do one click. And you can go back to January, or we can zoom in to more recently. So let's say we thought that this is 200 days. We can shrink this down. Let's say I want to look at the last 3 months. Well, here's the last 90 days. And it shows you that XRT, the retailer ETF, is down roughly 5%. A lot of stuff is stronger than XRT, but here's the ones that are weaker. You've got Nordstrom's is looking much weaker, and that's it. Got everything in the last 30 days or 90 days looks way better. But I can stretch this out if I want to go, to the beginning of the year, which I always like to look. There you go. For the last beginning of the year, your RTX or XRT, 40. It says roughly 40%. You've got Nordstrom's taking it to the south side, Dollar Tree getting crushed. You've got Walmart down there, Amazon, Costco, Kroger's, Home Depot, Target, all doing worse than this one. And the one that was doing really great, surprisingly, Macy's. And again, that's just because of the beginning of the year. So, you know, wherever we change our anchor point will obviously skew this, but I think it's a great resource for all of you. I certainly love looking at comparative analysis. You know, you might look at semiconductors this way or automakers or something and just say, how do they all compare and look against each other? So just throwing some other resources out there per Jeff's question of, you know, how do you drill down and see how they're performing? This is how I do it. And my first way would be looking at something like this where I have two charts, one on top of each other. And I think I've already mentioned my screen setup to you guys. When I have the three screens set up, on my left screen I have 4 charts, on my right screen I have 4 charts, and the center screen is predominantly all my watch lists, and my position managers, and a lot of times I'll have a 5-minute above and below. So that's like the smallest time frame I go. So let's say I move all the way from left. I've got on the top row is the market index. That could be the SPY or the S&P futures or the NASDAQ or the Russell or the Dow, or could be XRT. It's the broader index that the charts underneath belong in. If that makes sense to everybody. So at the bottom, I have whatever the individual stock is. So like right now, if I was to do this analysis, and it's not on this computer, it'd be on my trading one, my top row would be XRT. My bottom row would be, you know, Macy's. And it goes daily, 4-hour, hourly, 15, and 5. Those are the time frames I look at. Bring back Marshall Fields. We got that in a trivia question the other day, and I didn't even know what Marshall Fields was. Thank goodness my teammate did. Okay, so Jeff, that's how I do it. I don't know which way it's going to go. There were a few on here that I actually liked from the short perspective and thought maybe were looking a bit uglier. That would have been things like Nordstrom's. You know, we looked at that Macy's early on, and Macy's still looks really strong. I would shy away from that one. Walmart, even though it's chopping, it does look like it's getting weaker, but I don't see a real strong trend forming, right? What I'm really hoping to find is something that's slowly rolling over and showing a downtrend, like Urban Outfitters, right? That's making new lows. That's breaking lows. That one looks like a great short one. You look at Abercrombie and Fitch. Yeah, it's pretty much sideways. You know, you look at things like Chico's Fashion, still on an uptrend if you look at it for the last year and a half or so. All right, Rad, go over your little Rite Aid. I don't know how impacted Rite Aid's going to be by all this, but anyway, hopefully that helped you a little bit, Jeff, on the filtering scanning. So bottom line is pull up the watch list so you know what's in those components of the index, and then save that and scan through. I remove the ones that have low volume because I wouldn't trade those anyway, and then it gives me a much smaller universe of stocks to work with so that I can maybe find some trading opportunities in those. Cool. Hopefully that helps some of you out there. The sites I was using was Bar Chart to get the list of all the components of an ETF, and I was also going to stockchart.com to do their performance chart if you don't have access to a platform like TradeStation that allows you to do a little bit more. Okay, let's see. David asked this question, and then oh boy, that was a long one. David asked me this one. He says, in one of your shows, the topic of tips came up. Could you provide more info? And I keep seeing it dropping. If it is an inflation hedge and inflation is rising, does the price go up or down? Okay, so tips are a little bit strange in the fact of how they're calculated. The base price gets readjusted, right, based off the inflation number. So the interest rate will stay the same, but the premium the premium price will change. It's kind of a weird thing they do with tips. And bottom line is, as the market rates start to rise, it gets adjusted so to accommodate for those rises in interest rates. So you're in a rising rate environment, tips are going to help you adapt to those new rates and make more money. That's great. If it's a normal bond and rates start to rise or keep going up, the value of their bond is going to drop because you're going to have to sell it for less, right? No one's going to want to be paying full price for that thing when you could buy a newer one at the same price. It gets a better yield, so you have to discount it. Now, when you look at things like tips, let me go full screen here. So TIP is the main one. There's kind of 3 main Treasury inflation protected securities. This is an ETF. It's called TIP. One is SCHP and the other is VTIP. they represent different time frames, right? So some might be shorter term, longer term, but we'll just look at the TIP one, which is, oops, I don't have a tip up there for you. And I'm not supposed to use TradeStation, so let's get rid of TradeStation. And we'll go to this one and do TIP. So the thing to remember is with bonds, as the yields rise, the price of the bond ETFs will fall. So as those yields are rising, which they have been, you'll start to see the bond prices fall. So let me give you an example. SHY, right? So this is a short-term treasury, 1 to 3. And you can see that rates have been rising, right? Well, notice what's been going on with SHY. The value of the ETF has been declining because interest rates are rising. So holding on to something like SHY when you're pretty sure, we've been talking about this for a while, that interest rates are going to rise, not the best place to be. Now you look at something like TIP, and you notice that it's actually been going up. So the underlying has been going up in value because it's being adjusted upward. So this is a very different than something like TLT. Right, here's TLT, which has been just going down. As rates rise, TLT is going to be losing value. As rates rise with TIP, the underlying should actually be moving up because it's adjusting the premium of the bond upward. That makes sense, everybody? It's kind of a weird one with TIP. It's not the interest rate yield doesn't change. They adjust the premium to accommodate the change in interest rates. And I don't remember how often they do that. So anyway, wanted to share that one because it is kind of a weird process here when you look at something like TIPS. NJ, can you analyze Macy's? Yeah, we just looked at Macy's. Looking at the price chart of Macy's, as much as I think retailers are going to take it on the chin, Macy's is looking good, right? It's still on an uptrend. Now, granted, it was looking like dog doo-doo the last few years. If you look at it from 2015 through 2020, this thing was trash. And you really got to wonder, okay, so let's go to right here. This is right as the pandemic hit, right? You got to look at this chart and go, okay, this thing was already in trouble. Macy's was already having serious problems going into 2020. And then for whatever reason, 2020 comes along and it's like, oh, hallelujah, we're looking good again. Still nowhere near its highs of $70+ that it was back in 2015. But, it looks good right now. I mean, I'm not a fan of Macy's. I refuse to pay those kinds of prices that they charge for their clothing. It's ridiculous. I would rather fly to Thailand, have my clothes custom made to me where I choose every feature and functionality of it, and I'll still pay less, including airfare and hotel. I'll pay less than buying a full wardrobe at Macy's. So, chart-wise, hey, it looks good. Uptrend, higher highs, higher lows. Right now, it looks scary the way that it fell aggressively, but it's still a higher low. So, to me, it's a buy the dip situation on Macy's. And it's only based off what the price chart is telling me. I think most of you probably would agree. If you stripped out the name and said it doesn't matter what industry this company is in, what would you want to do? I'd want to be going long. I hate to say it. But you throw the Macy's tag on there and all of a sudden I'm kind of like, whoa, I don't know if I want to go long Macy's. So that's a tough one. If you hold a tip until maturity, do you make more? Yes, because it's going to adjust for the higher yield. So technically you would have made more. Correct. Yes, less. All right. What else? I think the real big news, I didn't take time to gather all of my market images for who's reporting earnings tomorrow, but there are some pretty important announcements tomorrow that we need to pay attention to because it is Wednesday, and Wednesday begins the deluge. If you saw the Monday morning must-knows, I use the word deluge. I try not to use that one too often, but it is the beginning of a monster season. So today, you had Fastenal Company report earnings. It was really the only major one that reported. Tomorrow, we kick things off with some serious financial firms, all of which of these will be before market open. There's one that just got pulled back, but you're supposed to have JP Morgan, Progressive, Goldman Sachs, BlackRock, First Republic. These are all major banks out there reporting earnings tomorrow, and that was it. Now, from what I've seen, it looks like Goldman may report the week after. They were supposed to report tomorrow, but it looks like they didn't state a quoted time, which means that they are iffy on their earnings. Progressive and Goldman have kind of backed out a little bit, but you still have JP Morgan and you have BlackRock, and then there's a whole bunch more coming up. So officially, earnings season is kicked off, and it'll be great to see how these ones perform. A lot of people feeling that it's going to be kind of the barometer for all of earnings season. Well, we'll see how those financial firms report. Of big interest for me anyway, because I really think that the cost increases we've seen in goods and services, which have been, in my opinion, substantial from the PPI data numbers. We saw PPI rise a lot, and we saw CPI, Consumer Price Index, actually decline. So if PPI is rising like it has been, those costs will be passed on to consumers. The number expectation is 0.3% CPI number tomorrow, which is at 5:30 Pacific time, 8:30 Eastern Standard, meaning 1 hour before markets open. I'm pretty sure you're going to see the CPI numbers bigger than 0.3%. But that's just me. Just doesn't seem right that we'd have PPI, which is the producers making these goods and services. That one was much higher than expected, and that cost is certainly going to be passed on to you and me. So that's pretty much it with regards to big announcements. If you are trading the Australian dollar, you have employment rate and unemployment change tomorrow as well. All right, what else do I got? Sears. Who's talking about Sears? What crypto? I bought Avalanche. Just a few $1,000s to add to the portfolio. Just one of those smart contract platforms that's getting a lot of hoopla and showing some pretty good transaction speed. So, I kind of wanted to spread mine around, so I bought a few thousand of that. I also I went long on some Luna, and I maybe stopped out on the futures side of things because I'm using futures to trade Luna. And as you can see, Luna was having a pretty rough day. Oh, 38? No, it's okay. I'm still in. My lockout price was 32.50, which would have bumped me out of this one, but we'll see. I'm in 10x leverage futures, 5x leverage futures, which is kind of interesting. All right, let's see. I think Avalanche is on Coinbase Pro. I'm pretty sure that's where I got it. Yes. Yeah, because it wasn't on Kraken. I was going to buy it on Kraken, but I ended up buying on Coinbase Pro. All right, guys, that's going to do it for me. Hope you enjoyed that one. No guest today, so a slightly different show. It's fun. Brandon Wendell will be on Thursday, which means tomorrow I have an open slate as well. I'm going to be pretty busy as I'm doing the Crypto Investor Live program this evening. I also have, for anybody who's taken the digital assets course, it's all self-paced. I'm doing a 1-hour session every 2 weeks just to answer questions on specific digital asset program Q&A. So you can check in your student lobby there and find out more information about that. That's me at 9 a.m. tomorrow morning. I'll be doing a 1-hour Q&A. Call it office hours for the digital assets course that we built. And then a Crypto Investor Live program on Thursday at 9 a.m. So pretty darn busy building a bunch of stuff out for the crypto program tonight. We're going to have a great discussion on oracles, one of my favorite topics in that space. Cool. Well, if you guys have any topics you want me to discuss for tomorrow, you can send those on in TraderMerlin@gmail.com, as you can see on your screen there, or write your comments and questions down below the YouTube videos. We can maybe push some of the porn advertisements down, or all these scammers trying to sell you guys Bitcoin and crap on my YouTube page, which I'm pretty good about removing, but you can always leave your comments. I respond to those as well. That's going to do it for me, everybody. Have a fantastic day. I will see you mañana. Take care.